Welcome back to Spicy Takes and Tax Breaks, the show where we mix strategy with girl math and somehow we make it all make sense for you. So today, listen up. With Black Friday basically breathing down our necks, I figured it's the perfect time to talk about how to turn the holiday chaos, which means the parties, the decor, the matching pajamas, the gift buying, the emotional support, peppermint mochas, anything else that you can include with that, into an actual legal decision and a legal deduction for you and your business. Yes, I mean legal, I mean deductible, and I mean IRS approved. It's not my cousin saying, hey, maybe you can write off your cat because it also guards your house, which is your business. No, friend, I love you, but that's not going to work. It's not going to fly if anything ever comes up. So I'm talking real strategy. Let's go ahead, grab your iced coffee, your wine, whatever it is that you're drinking today, and turn me up in the car, hide from your toddler in the pantry for the next 25 minutes or so, and let's get into it. So first, all right, babes, warm up your vocal cords because we're playing my favorite holiday season game. Is it deductible? You can answer out loud in your car, at the gym, in Target, wherever you are, maybe in the shower. Time is fake, the IRS is not. And if you're an entrepreneur like myself, you really understand the value of that. So let's get into it. Number one, holiday parties. Are they deductible? Yes, absolutely deductible. If they're staff or client related. So that could be team appreciation, client celebration. And this really does expand outside the traditional party vibe, but it could be cookie decorating party at the office where employees' kids join. You're really getting the team together in a different sense. It could be a staff event. It could be a vision board brunch with you and your virtual assistant, maybe getting together to plan Q1 of next year. It's a meeting. It's absolutely deductible. You can rent a house, whether it's your house or someone else's house, for a holiday plus planning day. Venue, food, drinks, entertainment, all of that is deductible. And one of my personal favorites is the holiday branding strategy party. So this is where you batch content while drinking Prosecco. And yes, that is absolutely considered marketing. No, the IRS does not need to know about the Prosecco, but even when they check, it is still absolutely deductible. So the only audit warning I really want to mention here is if the employee at your party is the cat wearing a tie, please don't play with that. Don't play with me. Don't play with the IRS. It's not going to be deductible. Next up, would you think matching pajamas for staff or content photos? Is that deductible? Absolutely. If it touches your Instagram, your LinkedIn, your TikTok, your Facebook, whatever that looks like for you as a personal brand or your business, it is absolutely a business asset. Matching PJs for a holiday reel? Definitely. Ugly sweaters for a TikTok or a party you're throwing? Absolutely. Matching sets for the workout queen or the write-off queen or the write-off of equipment? Absolutely. That is going to be a promotional item and that should be absolutely deducted through your business. Example, so let's say I buy matching outfits for myself and my daughter and we are going to shoot something for the write-off queen or for AV accounting. I film it, I post it, I absolutely deduct 100% of it. Caveat here would be like, let's say you're buying maybe an $800 set of Skims pajamas for the team, which is just yourself and your child. Probably there's going to be questions that are asked by the IRS for that. Unfair? Absolutely. It sucks. They should absolutely allow us to do that. But let's play smarter than that. It's not going to be deductible. Reality is it's not. Another one is client gifts. This is one of my most asked questions from clients. Absolutely, it can be deductible. But traditional gifts are capped out at $25 each. So really, the gift is very limited. The IRS apparently still lives in the 1972. Inflation is not considered when that value is put into place. But here's the loophole. Branded gifts aren't considered gifts. They're considered now promotional products, which there's not a cap on that. Branded gifts also can be anything. It could be putting a logo on a wine bottle. It could be a charging bank with your logo on it. It could be Lululemon's sweat track with whatever that is, whether that's the write-off queen, whether that's the workout queen, whether that is anything else entailed. Promotional products do not have a cap. They are part of your advertising spend, and there's no cap there. So give branded cutting boards, wine glasses, candles, hats, bags, ornaments. All of that is going to be fully deductible to your business. Definitely do it if you're thinking about giving gifts or expendituring anything there. It's fully going to be deductible. The Write-Off Queen sends out bougie branded gift boxes every single year. We put our logo on it, we deduct it, and we are also providing our client with something they're looking for, they're actually wanting, but we just added our logo to it. So they're advertising for us, they're going out there and networking our name, but also it's something they wanted. It's a gift to them and a deduction for us. Another one of my personal favorites is going to be bottles of wine. Is that deductible? What do you guys think? If it's branded, it absolutely is going to be deductible. You can buy white wine with your label on it, champagne with your label on it, branded tequila for a client event. So any of those things are deductible fully, but I'll give you a client story of mine specifically. She bought tequila bottles and used them for a holiday VIP event. This is talking hundreds of guests. Some of these clients, some prospective clients. And guess what? This is fully IRS approved. All of that was 100% deductible for her business, but also a huge perk for her clients, her friends, potential clients, any of that. All of it, IRS approved, all of it deductible. The hangover, not deductible. Not necessarily worth it either, but definitely great memories were included with that. So maybe worth looking at, depending on what your clientele is. Holiday travel, again, one of my second most asked probably in this arena. And what do you guys think? Is it deductible? Maybe. I love this one because a lot of times it absolutely can be deductible, but there are other times where it can't be deductible. And this is kind of where a lot of people mess this up. If more than half of your days include 4+ hours of somewhat of work or business activity that is necessary in order to me, it is absolutely deductible. Examples of this would be filming content. This would be a team function. This would be strategic planning days, masterminds, collaborations, client meetings in another city, networking meetings in another city. This can extend in such a different fashion. It could even be looking at locations if you're looking to expand or grow into another market. And outrageous kind of, maybe not outrageous, but a little bit out of the box. But an example would be I could go to Big Bear with my daughter and we could film a snowy cabin, holiday content, and meet maybe a local business owner or two, maybe hit a BNI meeting once or twice. But realistically, that would be fully deductible as long as we're documenting it, even if that's on our calendar, if that is in our agendas, however we put that, it's purposeful. It's absolutely a deductible business trip at this point. So the only things here I'd say don't do, because I do have a lot of people try to float this, but if you're taking one selfie in front of a laptop, maybe 57 beach trips that are personal only, and you do post one to social media, that's probably not going to be considered if you're ever audited. So be conscious when you do this. Make sure you are documenting it when you do this. Another big one, just because it's on my big to-do list right now, is going to be holiday decor. It absolutely can be deductible, but it should be for your office. It needs to be for content. It needs to be for something related to your business. If it sits in your entryway at home and you don't have a business party or an event or anything that's happening there related to the home also, absolutely it's not deductible. You can put it there, but if you're audited, you're absolutely going to have to pay that back with penalties. Not worth it. Examples of things that absolutely are when it comes to holiday decor is anything for your office that's holiday decorations, whether we're talking wreaths, lights. You can hire a contractor to put holiday lights up for your office. You could do an event at your office. You could put any sort of garland. You could do pillows, throws, any of that. Absolutely. You can do holiday reel backdrops, even if that's at your house. Office lobby trees, props as a giveaway, whether that's in social media aspect or in person. Custom wrapping paper for client packages. Any of that is absolutely 100% deductible through your business and should be taken advantage of. So let's think of this. If I were to be like, hey, let's do a Write-Off Queen pink Christmas tree for content. Yes, absolutely deductible. An AV accounting specific wreath, whether that's for the office or it has logo branding. Yes, absolutely. If I want to get a tree for Addie's playroom, if I'm posting content in there and having her be a part of that for a business asset, in the sense of I'm trying to generate revenue, get leads, put her out there in a branding sense, yes. If I'm just doing it because, hey, I want another tree in the house, no, it's not. But let's think about it this way. If your decor mysteriously migrates to the playroom the next year, well, it was a business item at the time of purchase, and that is absolutely IRS approved. So next one, gifts to your spouse, boyfriend, girlfriend, best friend, whoever that is. No, it is not approved by the IRS. Not as a business deduction. Absolutely as a personal, you should write that into Your checkbook, sure, but not in any sense that's going to give you a tax break or a liability sense that you want to encourage. Why that is, the IRS does not care that maybe your boyfriend or your best friend watched a kid of yours while you were to go to a Pilates class or a work meeting. But if you're actually hiring them as a contractor and you pay your spouse or your boyfriend or girlfriend or best friend, you can get a deduction, I guess, but they're also then claiming that as income. And depending on if they have other income, which hopefully if they're one of your adult friends or adult boyfriend, girlfriends, they might, but you realistically get zero deduction unless you're hiring them. So skip it. Let's go into the next. Gifts to your kids. Absolutely. I'm not even going to wait for you guys to answer that question. Yes, you absolutely can. But they need to be an employee first, and the gift can be part of their compensation. So I'll give you a few examples here. If your kid can use an iPad, they can and should be working for you. If you don't already do this or implement this, please go back to some of our other episodes if you haven't already watched it to understand what and how to do this. But if they are able to operate an iPad, even in a coloring like sense, you absolutely should be using them in your business. Legal deductions here would be actually getting them an iPad, whether that's for Christmas, their birthday, whatever. But in the spirit of Christmas and Black Friday coming up, an iPad for editing, this would be deducted through your business as a business deduction, not even through their payroll. Clothes for a photo shoot, camera equipment, holiday bonuses, toys used as props for any of that stuff. That is absolutely deductible. Another thing you can do is you can actually pay your child, and similar to mine, my daughter is 5, and whether she approves of it when she's old enough or not, and some of the work that she does goes to some of the ordinary expenses in our personal life. If I were to pay her through the business X amount of money, that can also go towards her Christmas gifts, whether she's realizing it or not. So if Addie were to show up, that's again my daughter, if she were to show up in any content, which she does in both of my companies, she's paid. If she shreds mail for me, she's paid. If she opens mail for me, she's paid. If she goes ahead and shoots content of me with my camera in it, absolutely paid. She has so many different job duties. And again, circle back to other episodes or reach out to us if you want to learn more about that. But there's millions of things your children can do, even if they're at a younger age. They're getting paid, you're shifting your income to another bracket, which is not being taxed, but you can use this for virtually anything. Taxes suck, but with the code, it's actually pretty great when you realize how much of your real life is actually overlapping with your business. Just don't try to write off your man's Christmas gift, for God's sake. That's a hill the IRS will die on fighting you on, and it's not one you need to even try to capture. There are a million things that you can be using, and that's not one. All right, let's get into it and put it into girl math terms, but still in an IRS approved standpoint. If it's contact, it's deductible. If you're shopping haul, creating vlogs, writing gift wrap tutorials off, absolutely, that is a marketing expense. Do not look at it any other way. Number 2, if it saves your business time, it saves you on taxes. So that could even just be hiring someone to help wrap your client gifts. Absolutely deductible. Holiday contractors, whether that's putting things up on your roof line because you're trying to get clients in the door, or if that's errand running for you, or if that is contract labor in another sense, whether that's extra staff support or having people answer the phones or having them kind of take care of more of your personal errands while you're able to run your business, absolutely deductible. Big one here, though, is number 3. Receipts are so much power. If you have documentation, so much is possible. Photo proof works, calendar proof works, note apps work, any of that. Screenshots, keep them. The IRS cares if it's documented, not how aesthetically pleasing the screenshot is. And number 4 here is if it builds your brand, it builds your tax strategy, it builds your tax savings on top of it. Holiday photos, giveaways, client events, promotions, branded boxes, all of these are deductible. They're going to grow your business, and they are also saving you money off the top. So if you're going to already be spending the money, make sure it's in a way that can be fully deductible. So some of the creative holiday write-offs that we are recommending to our clients, at least to consider if they're spending money on things, is going to be that specifically branded gift boxes, client or staff appreciation events, no matter what that looks like, year-end content days or strategy building days for the next year. Plus, bonus, add the Augusta roll on top of it, and you're saving another $14,000 off the top. holiday giveaways, documented board meetings. Any of these things can absolutely be deductible. Again, holiday trips are going to be more of the iffy thing, but if you're doing business, absolutely take advantage. All of these are the write-off queen approved, as well as AV accounting approved. Anyone should be taking advantage of these. Audit triggers that you should be kind of keeping an eye out for. Quick reminder, a list of what will get you audited are going to be personal gifts disguised as business. Not worth it. A million plus other strategies you should be deploying, so you don't need to do this. Family vacations labeled as strategic planning. Add the strategic planning in or just ignore it altogether. Gifts for friends that are not also clients. Ignore any sort of lack of documentation. Like I said, this is so easy. This can be screenshots, calendar, whether that's Outlook, Google Calendar. However, it can be meeting agendas, emails, photos, receipts, whatever that is, keep it. It's not that hard. And if you can't prove it, the IRS won't believe it. So there's people that come to us all the time, and whether they were legitimate or not, they pulled out cash for something that may have been fully business legitimized. We have no proof of that, and the IRS does not care regardless of what we try to do to prove it for you. So before you run off to decorate your house like the North Pole, keep these final reminders for year end in mind. We'll go through deeper in the next episode, but make sure you're maxing out your retirement, paying your spouse and kids properly, running an accountable plan for reimbursements, whether that's home, vehicle, or etc., prepaying expenses, cleaning up your books, counting inventory, fixing any bookkeeping possible before doing your planning is one of the most important, because procrastination is not a tax strategy. It's a trauma response, and we should really cut that out. We're going into 2026, and we should end 2025 out with a bang here. So thank you guys so much for hanging out with me today. And remember, if Santa is able to deduct their reindeer maintenance, their gift building, elf paying on a 1099 schedule, you can absolutely deduct your holiday business expenses. Hit subscribe and leave a review. Please share this with your friends or your holiday chaos business besties, and I'll see you guys on the next one. Looking forward to it.